Hey, Forex Fortune Hunters, Tom Wilmot. We've had a wonderful response to some of the videos we've done on small account preservation and small account growth strategies. And I'd like to comment further on that in this video and make the case for why Forex might be your best choice. Even if you don't know anything about it today, right now, Forex has some benefits over trading eMini futures and other instruments that you simply might not be aware of. I'll get into all of that. Time frames, contract size, volatility, but hold on to your hat. We'll get to it right after this. Okay, Fortune Hunters, let's cut to the chase. What we're going to try to do in this video is not just be a big proponent of the Forex market, but try to describe to you some of the differences in trading Forex and various currency pairs versus, say, eMini futures or perhaps options or something that you might try to trade inside your self-directed IRA. Those are just a couple of examples. And there are some big differences, and even though most people don't know a heck of a lot about Forex, it has some benefits, and that's what I'd like to describe to you in this particular video. Not so much, again, so that you should take a risk when you don't know anything about the market. I'm not a proponent of that at all, but simply so you would know if you're sitting at your kitchen table trying to decide if you can make a little extra money by trading, what markets might be most intriguing and why. So let's begin. On this particular chart, we have the odd US, a 30-minute chart, and that is one of the particular currency pairs you could be trading. You have a number of others, the euro versus the US dollar, the dollar versus the Japanese yen, and so forth, all the way out. Now, first of all, I'd like to point out that this particular set of currencies have different volatility patterns. Some are very volatile. For example, the pound versus the New Zealand dollar. Let's get that up on the wall. This particular pattern has potentially 100 to 150 pips a day of motion. That's significant, and you want to be very careful with something that volatile. Now, also, if you're involved in the markets at all, you could be taking a look at the eMini futures, for example. Let's bring up a TradeStation chart for you. This is a chart of the eMini H contract. It expires in March, and this is the one that most traders are trading now. You can also trade the NASDAQ or the YM or oil or any of the others. And recently the exchange in Chicago has also unveiled a new micro eMini kind of strategy that cuts down on contract size. Now, let me explain that one of the reasons you might want to consider Forex is because you can trade for as little as 10 cents a pip on many of the brokers who are out there. You do not have to go to full contract size, which is basically $10 a pip, where the risk increases geometrically. Now, in the area of eMini futures, in this particular case, one particular tick on this chart, one advance or decline potential, is worth $12.50. So it doesn't take long to figure out that if as it's been so volatile lately with the coronavirus and also before that with the trade wars and so on and so forth, the eMini futures can be very, very difficult to trade. Also, with NASDAQ, it's $5 a pip. With the YM, it's $5. I say a pip, a particular portion of a point. And basically, the situation is that you have to put your stop loss in a position where you could be as much as $200 or $300 away from your typical stop loss. Many people make the mistake when trading eMini futures they have to put their stop loss closer because they're afraid of losing the value of that particular trade. But the problem is that where they are putting their stop loss isn't sufficient to really protect them from what's going on. So, for example, if you were to put your stop loss down in this area and the trade got away from you and you entered up here, or even here, when we take a look at that, we see on this chart that's 3,340, maybe half, or 3,340. Down below here is 3,332. That's an 8-point or $400 stop loss that would have to be in place on this particular account. And compared to 10 cents a pip, the volatility of those two markets, it compared favorably for Forex. Likewise, if you're thinking about trading options, and I won't put it on the board right now, but we've talked a lot about the Fidelity Active Trader Pro. For those of you who might have a self-directed account with an IRA account with Fidelity and want to trade options, that has a steep learning curve. And in addition to that, getting qualified to be a level 3 options player, which would be things like credit spreads and the things that people use as everyday tools and options, in addition to puts and calls, straight puts and calls or covered calls. Those advanced strategies require more competence and more experience and more money. So as a result, options could be difficult for you to qualify for, depending upon the particular broker that you're working with in your account. So those are just some of the quick things that I'd like to bring to your attention. Certainly in the area of pips, we could see here that even on the most volatile pound New Zealand dollar, for example, the volatility is big, but you could drop down to as little as 10 cents a pip and just trade one of those contracts, and maybe your risk even with 100 pips would be $10. So you can scale that account, whether it's a $500 account, which is kind of the minimum, as opposed to $5,000 for the eMini futures, which can get blown out in less than a day. And so as a result of that, this is something that you might want to consider. Now, in this particular area, one last quick point for you, which would be time frames. Also, you want to consider if you're not someone in the United States, and even if you're someone who lives in California versus the East Coast, where the New York market time zones are a little bit more forgiving for you, that the focus of the eMini futures for the most part and the IRA investment strategies would be focused on a New York time frame. So if you're trying to trade those markets internationally, you may have some sleep deprivation issues. For example, trying to trade the eMini futures at 8 o'clock in the morning is very late, later on in the afternoon for the Europeans, and for some in Asia, it's almost impossible. If you take a look at our vision here, what we've done on this particular chart here was the weekend. We're recording this in the first part of February to 2020. Notice that we had a downtrend on Monday into the London market. This is a 15-minute chart. So here's London, open 3 a.m. Boston time. Here is the 7 o'clock hour, which is another hour I use kind of for the opening of the U.S. market. The market for the opening of the New York Stock Exchange, which is also more important than it used to be for Forex. In terms of different pairs reacting differently to the stock market, this would be in this area here. And you can see that depending upon where you live in the world, trading this pound New Zealand pair, which can be a pretty interesting pair to trade, even though it has a 7 pip spread most of the time, if you can get 100 pips, 7% of that is not that big a deal compared to the commissions you might find in a very volatile eMini kind of marketplace. So those are some of the things we want to consider. Once again, here was your weekend. Back here, this is the opening on a Monday morning early. Here is the end of day Monday moving into the Tuesday time frame. And so one last thing I'd like to bring to your attention in this particular case, I'm going to change this to simply nothing. And I would like to now, this is just our candlesticks. Let's change to a daily chart. And let's try to see by adding the indicator average true range, which is in the indicators list that everybody gives you, no matter your broker. We can take a look at the parameters. This would be a 14-day. Let's drop this back to 10. This would be a 10-day moving average of the full range of this particular pair. The situation is that you can see down here. Let me change this one for you, indicator list, so it's clearer. Average true range. We're going to make that a yellow or a white, and we're going to increase the thickness so you can see it more clearly. Okay, notice that over here is our scale. This is up here 288. You can't read it because it's so small. They're tiny. 288 or 68 pips or 88 pips, all the way down to just 10. Now, in some cases, the market here for this particular pair is quite dramatic, and it goes up to as many as 150 pips in a day. So this would be the average number of pips that the pair traveled during that particular thing. And notice the difference here, and we'll put this, let's take a line and put it kind of in the middle in this area here. This is 182 pips. Let's bring that down till we get to 150, which would still be a pretty significant kind of a thing. You can see that in this 150 range, that's well within the average kind of velocity of this particular marketplace. Now what I'd like to do is save this particular chart. I'm going to go back and save it as 1 again. Hang on 1 second here till we get to this one. We'll go back here to 1 and we'll save it. Now let's compare that to the euro and the USD. We're going to go to a daily chart. We're going to bring up our 1. Where to go? There it is. Now you can see here that the maximum that you would ever get on the euro USD in a 1-day period is up here around 71 pips. So the pound and the New Zealand market are significantly higher, obviously, almost double. And as a result of that, if you were to draw your line here for this one, you can see that in this case, at this kind of mean level, you'd be talking about 50 pips a day. So those are some of the things that you may want to consider. Just to review, you want to consider with options whether you're going to be able to qualify for the advanced type of trading that is required, whether you have the account size and background that's required. With the eMini futures, you really have to consider the volatility of the market in that daily time frame, and whether you want to take into account the larger amount of financial backlog you need to really put your stop into the correct position versus the Forex market, which is one where you can in fact trade something 10 pips a day on a 5-minute chart. You could trade it on a daily chart as a swing trade as well, and there's a lot of flexibility there. Also, just one last comment. If you're in an international setting using the Forex market, you can find a time frame typically that's good for you. It may not be smack dab in the middle of your day from 9 to say 1, as it would be in the New York markets or in the London markets, but it is possible to find a sweet spot for you where you don't have to get up in the middle of the night to trade. So those are just some ideas for you to consider as you're thinking about the Forex market. Hope that's helpful. Please comment if you have any questions about this, and or give us a like if you wouldn't mind, and please subscribe to our channel by hitting that red subscribe button if you'd like alerts on new material. Also, see us over at fxfortunehunter.com and get some more insights on how these markets move. Thanks for watching.